market humming low and mean. Dead men walking, pockets empty, bed and rent on broken dreams. I sip my whiskey slow and heavy like the weight of all their dead. Watching margin calls roll in, they ain't climbed out that hole yet. Took my time, played the long con, laid my traps and let them bite. Turned their gold to dust and nickels, now they praying for the light. Hands are shaking, screens are flashing redder than a preacher's shame. I've been stacking while they slacking, that's just how you play the game. It's Liberation Day, watch the empire fall. I'm sitting pretty while they beg and crawl. Stacking green while they lose their nerve. Let them chase the smoke while I hold the curve. I don't bend, I don't break, I just rise. Let them drown in the lies, I'm claiming the prize. It's Liberation Day, they're all out of luck. While I'm cashing in, baby, don't give up. Fuck. Granddad told me, boy, you listen, money moves like running water. Let a fool get rich too early, watch him drown inside the slaughter. Snake oil dripping, preachers pitching, selling lies in plastic jars. Now they're hawking all their wristwatches to buy back repoed cars. Smoked them out, watched them stumble, took their bets and built my throne. Now they crying, calling Jesus while I call Geneva home. Every candlestick's a tombstone, every wick's a warning sign, but they never read the writing, now they're running out of time. It's Liberation Day, watch the empire fall. I'm sitting pretty while they beg and crawl. Stacking green while they lose their nerve. Let them chase the smoke while I hold the curve. I don't bend, I don't break, I just rise. Let them drown in the lies, I'm claiming the prize. It's Liberation Day, they're all out of luck. While I'm cashing in, baby, don't give a fuck. Red on the screen, hands in the sky, blaming the stars while their fortunes die. Saying it's rigged, saying it's fate, but I was counting every footstep while they took the bait. It's Liberation Day, watch the empire fall. I'm sitting pretty while they beg and crawl. Stacking green while they lose their nerve. Let them chase the smoke while I hold the curve. I don't bend, I don't break, I just rise. Let them drown in the lies, I'm claiming the prize. It's Liberation Day, they're all out of luck. While I'm cashing in, baby, don't give a fuck. So pour that drink, roll that smoke to the ones who knew when to cut the rope. It's Liberation Day, let the money flow while the broke boys drown in the undertow.
Brother. Good morning, and happy Liberation Day to everyone who celebrates. Normally, we don't try to get that religious on the show, but I think today is a very special holiday for all of us to celebrate. So whether you identify as a liberator or not, let's just all enjoy what we have going down today. Ah, man. I remember my first Liberation Day when I was a wee little lad. And look at us now. Look at how far we've come, team. You know, not saying that we've necessarily learned anything better about trading or how to be more profitable or risk management or discipline, but still, think about all the missteps and the ha-has and the hee-hees we've had on the way from then until now. Man, it's days like this, it is global-based holidays such as Liberation Day that really just gets me jazzed up. Really gets me jazzed up. I feel like this is why we live, you know? It's for family-based holidays such as this one that it causes a man to take stock of his own life and realize what's worth it, what isn't worth it, Where's the proper effort going? Where has it not been going? Yeah, so obviously we're getting ready for it. Big Liberation Day. I hope you guys are ready because as it normally goes in the past, it is a fun-filled day of degenerately gambling in the casino. How cool is that? That we have a family-based holiday just for degenerate gamblers. For years and years and years, the entire gambling community was pushed to the side, and the world, society, was referring to them as outcasts, saying, you don't get your own gambling holiday. There's no such thing as a national, federal, global holiday where you get to take off from work and gamble all day long. And yet, here we are. And here we are. So to all the naysayers in the past saying you shouldn't be betting your kids' college funds on March Madness on the 16 seed upsetting the 1 seed. To all the people saying that maybe options trading isn't in your future. Maybe you shouldn't be parlaying a random darts league in some dive bar in Iceland when you're up at 4 a.m. To all those people, look at who's getting the last laugh. Here we are. Gamblers unite. It's our day. This is our day where, you know how on St. Patrick's Day, you go around it and you're like, everyone's a little Irish today. On Liberation Day, everyone's a little bit of a gambler. You know, whether you are ethnically a gambler, whether you are religiously a gambler, whether you are traditionally a gambler, whether it's a combo of those three or nothing at all, it is on days like today that we all let it kind of shine through. You know, we all really let it shine through. So I hope you guys got in a good breakfast. I hope you got your coffee. I hope you hit the gym already because we are going to be doing this all day, dude. Today's going to be a wild one. Not only do we have the world's largest casino officially opening in 25 minutes, but at market close, that's when the leader of the free world, the commander-in-chief of the U.S. Army, U.S. military, I should say, he'll be taking the stage at the Rose Garden and he'll be letting the world know what the hell is up. And then that's going to lead us to a bunch of responses tomorrow. And then that's going to lead us to Jerome Powell speaking on Friday. And on top of that, also getting the unemployment report. So basically from now until market close on Friday, we're not sleeping, folks. We are not sleeping whatsoever. If you're up now, you better get ripping it. Do whatever you need to. Get some stronger coffee. Get some Adderall. Get some things that I probably can't say on stream before YouTube gets pissed off. But we're about to rip it. We are about to rip it. But that's what Liberation Day is all about. It's all about liberating yourself. So I hope you guys got some good rest last night. I hope you did whatever you need to. I hope you made a shitload of money yesterday, and I hope you are prepped for today. I also hope that, as you can see here, I hope you didn't swing your calls overnight because you are getting murked. Intraday action yesterday was somewhat decent, but as I was screaming from the mountaintops, this is not the time to swing. And I think a lot of you, and I could see you guys in chat, you're like, well, I actually swung some calls. It's like, well, why the fuck did you do that? You knew it was wrong. I knew it was wrong. We all knew it was wrong. So why would you do it? In all reality, I feel for you if you swung calls overnight because you're down money. I don't want anyone to lose money. But ask yourself, was that a good decision? Like, I guarantee you, the moment that you were actually like firing the trade off, you knew it was bad. You knew right when the market was about to close and you're like, should I take the profits? Should I not take the profits? What should I do? You knew you should get out. Like if you're just having a moment of lucid clarity, lucid honesty with yourself, you knew you should have been out. You knew it. And like, I feel for you. You took a chance. It didn't pan out. You had a low odds chance of it working out, and you swung at a real bad pitch, and surprise, surprise, it's a strike. So I don't know. Good luck with that. Maybe you get a recovery. Things aren't looking so bueno. The overall market getting beat up. Tesla's delivery numbers came out. I believe year over year, they're down 13%. That's not so good. The Model Y, I believe, is down 12%. And then their less popular vehicles down like a huge percentage. So the deliveries related to Tesla are pretty horrible. That's the ticker right over there, the top right of the screen, right over there. That's why it's getting clocked so much. Tesla having a little bit of a struggle bus type of a morning. So we're going to get into all of this. We're going to break down kind of what to pay attention to today, but the real things to pay attention to today happen to be right after the market closes. Then I'll set you up for the other things to pay attention to for this week. Then we're going to circle back to the setup of the day, like particularly what we see in terms of support, resistance, the options market, the option structure. Where's the positive gamma? Where's the negative gamma? Where's major support? Where's major resistance? Where's the GEX transition zone? Where's the DEX transition zone? What in the world is the big money playing overnight? Basically, how is everyone really structured to play today? And ideally we do that. So kind of coming back to what we were just talking about, not doing stupid things throughout the day. So I hope that sounds like a good game plan to everyone. Very, very quickly, if you haven't already, and you want to trade with someone else's money, right now the best sim to funded offer is Take Profit Trader, TPT. Use that code Goonie to not only get 30% off, but you do not have to pay an activation fee. So on the moment, because you guys are all top tier 10 out of 10 traders, you're going to pass the test the first time, obviously. Well, this is a great way to save a shitload of money because you're not going to have to pay that activation fee. So not only do you get 30% off on the test, but no activation fee. Use that code Goonie pinned to the top of chat in the description of the video. You know, this is one of the major sim to funded ones that I use. It's one of my favorites. Unfortunately, here you're only capped at 5. So like I max that out at 5. Different sim to funded prop firms have different max amounts of the amount of accounts you could have. This one has 5, but I always want to pitch to you guys whatever the current best offer is. And right now that is TPT. That is Take Profit Trader. Use that code Goonie, Goonie, to get 30% off and never pay an activation fee. Pinned to the top of chat in the description of the video. And now let's talk about how the casino is shaping up right here. Tesla reports 336 vehicles deliveries in the first quarter, way below what they wanted it to be. Stock futures slip ahead of the Trump tariffs. Obviously, the trade war is what everyone is talking about today. I saw this. This is absolutely hilarious. You could get your Trump Liberation Edition, includes tariff blaster and economic dominance. China... A Liberation Day executive order, a little bit of a wall trade victory. Obviously, that's pretty funny put out there by Trend Spider. But more on a serious note, let me make sure this audio is on. Trump tariff plan still in limbo ahead of Rose Garden event. So this is kind of the news that we're getting is from the White House. We're getting the news that Trump's already set. He's ready to go. He's just waiting and he's ready to rip it. That's how things have been kind of pitched. But people kind of on the outskirts are saying, honey, there's a lot of things still being figured out, and it might be going down right to the wire.
Liberation Day. Liberation Day is the beginning of Liberation Day.
April 2nd is a liberating day for our country. We're
Hell yeah.
getting back some of the wealth that
To liberation.
very foolish presidents gave away.
We're in the process of imposing reciprocal tariffs.
The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation, perhaps.
Friend has been oftentimes much worse than foe.
That money's going to be coming back to us in the form of tariffs. We're going to be very nice. Relatively speaking, we're going to be very kind.
I forgot to tell you the rules of today's show, that you actually have to take a shot every single time you hear the word liberation or liberating or any other reasonable variant of the word. I forgot to tell you that. So once again, I very much hope that you ate a solid breakfast so your stomach is has a good foundation going into this. But yeah, the rules of today's show are to rip a shot every single time you hear the word liberation, as is normal customs on a global liberation day. Trump tariff rollout opens new era of risk for global economy. Basically, people are going to say, are we going to scale up in tensions and the old tit for tat of you tariff me, I tariff you, and back and forth and back and forth, basically like the Hatfields and McCoys? Or is it going to go the other way where well, hang on, if the U.S. is doing reciprocal, let's just go to zero so then they don't tariff us on anything. That's what we're going to find out. But regardless, you don't have to search far to find a lot of negative news, doomsday, a lot of negative Nancy's, sour Sally's, whatever you want to call them. Wall Street trading desks warn S&P 500 sell-off will get worse. Wall Street trading desks disagree on many things, but there's one view they now seem to share. President Donald Trump's looming tariff announcement will exacerbate the S&P 500 index sell-off, at least in the near term. You know what? Call me a crazy person, but whenever I hear that everyone agrees on something, it kind of makes me just feel like they're going to be wrong. And I don't even necessarily have that good of a reason for it. The stock market is currently gapping down. The options chain is put dominated, the overall chain. We have a lot of uncertainty currently in the system. So I get it from all these measurable things, the options market, price momentum, price structure. I get that the bears are in control. I get it. And generally, that's what I'm going to trade off of. But I also believe that the market has a unique, uncanny ability to make the most people pay and cry and basically think very, very negative thoughts. So when I see headlines like this, where I see doomsday across the board and everyone's freaking out, random people reaching out to that I haven't spoken into in forever, like, should I sell all these stocks? Folks, I really do think we are closer to the bottom than we've ever been at this exact point. When I see this much absurd negativity, I shouldn't call it absurd. I think it's somewhat well-founded. When I see this much magnitude, when I see this much of extreme negativity of what is going on, it really makes me feel like that one particular boat is getting a little bit too overfilled, and I'm seeing a lot of emptiness. I'm seeing a lot of comfy seats over on the bullish side of things. So, of course, I'm not just going to randomly fire from the hip and say, oh, just because everyone's negative, I'm going to do it now. No. Okay, you still have to worry about some timing. But this idea of like just the extreme bearishness we're seeing from all these apparently trading desks, from all the lamestream media, from everyone on FinTwit. If you go on YouTube, it's not hard to see everyone's just like, oh, negative. It's going to get worse. Folks, we're already down 10-ish%. Things are already pretty kind of gotten a little bit into a gnarly situation here. So I kind of like this contrarian setup. So I personally am still looking for that dip buy opportunity. Once again, to clarify, not just firing from the hip. There's going to be a couple structural things that I need to change for me to go. But I just don't agree with it. When I see this many people saying the exact same thing, I figure, oh, that's the exact group that's going to get absolutely boned. We're going to find out from Trump, 4 p.m. today, Rose Garden. You got to pay attention to that. Then tomorrow, and really as early as today, we're expecting other countries to respond, and we're already kind of getting an inkling of that with China. China is set to restrict companies from investing in the U.S. So that's some breaking news as of this morning. China restricts companies from investing in the U.S. as tensions rise. China's restricted local companies from investing in the U.S., according to people familiar with the matter, potentially giving Beijing more leverage in trade negotiations with the Trump administration. On top of it, China's tariff dodging move to Mexico looks doomed. Chinese firms invested billions of dollars in Mexican factories to make products for the American market, shipping goods tariff-free under a U.S. trade agreement now in peril, very much in peril. And if the whole Mexico move doesn't work out, well, they're already making, potential plans to fix that. China President Xi will meet with the European leaders, including France's president, Spain's PM, and the EU president in Vietnam in the coming weeks amid rising global trade tensions over the U.S. tariffs. Europe seeking greater intimacy with China and Southeast Asia to offset U.S. reliance. So, folks, there's many ways that this could particularly break. I mean, let's just think about this. There is a theoretical scenario where tonight we hear from Trump, and it's kind of exactly what we expect it to be. And within the coming days, maybe as early as today, but maybe by this weekend, maybe early next week, all these other countries are like, okay, cool. We get it's reciprocal. We don't want you to tariff us, so we're not going to tariff you. And most countries end up at zero, and basically Trump gets exactly what he wants. That is one potential scenario with a certain probability associated with it. I'm not going to bullshit you. I wouldn't know at all how to model that particular situation out, but it's clearly non-zero. That would be the ultimate bullish situation where this is very short-lived. It's a flash in the pan. All of a sudden, there's so many puts in the system, they get closed out. The put open interest drops. That pushes the overall delta higher. We're going to see vol collapse. Then we get a Vanna rally that leads into a gamma rally. And from a price perspective, that's that hardcore V-shaped reversal where most likely the SPX would get back up in excess of 6,000. That's one potential avenue. That is one potential scenario. The other potential scenario, or one of the other potential scenarios, would be a continuation of what we're seeing here. Basically, Trump comes in heavy-handed. He's refusing to take his foot off the gas. And these other countries, instead of basically doing what he wants them to do, they start to try to figure out other trade agreements with other countries so they don't basically have to bend the knee to Trump. That is obviously also a possibility. And from there, it could get uniquely bad if all of a sudden we start to see them saying, you know what, we're going to raise tariffs on you. And then because Trump seems to be very much beholden to this concept of them being reciprocal, if they jack up, he's going to jack up more. And before you know it, it kind of just like, I don't know, almost spirals out of control in the negative direction where everything becomes more expensive. And it's not going to take much time before we see that impacting inflation going up, employment going up, corporate earnings going down. And before you know it, within a couple months, especially within a couple quarters, you would see that permeating the larger economy. And yeah, that could cause some extreme pain in the short term. That's obviously another potential scenario. I would say the most bearish scenario, and become more bearish if the ceasefire talks between Russia and Ukraine die off. That would be really some negative, I guess, bearish sprinkles on top of that cake. So that would be another scenario, the most bearish scenario to consider in the short term. And obviously, once again, a non-zero potential. Then there's obviously the scenario number 3 right in the middle where we get some good things. Maybe the ceasefire talks between Russia and Ukraine continue to progress. Maybe some deals are struck with some of our larger trading partners. So for example, if you look at the actual dollar amount we're trading with these other countries, the EU is a huge one. So like maybe a deal is struck there, but then not with Canada. And we're kind of like awkwardly in the middle. Like we have some good news, some bad news, and then we have to weigh it out. And then that's going to be more work on us to figure out the particular industries that are going to benefit, the particular industries that are still going to be under pressure. So at that point, it's kind of like having knowledge of the individual trade agreements, each of those, and saying, okay, like who are we currently trading with? Who are we not? I would say that is going to be the most likely scenario where we're kind of somewhere in the middle. Like it's not all bullish, it's not all bearish. And then from there, we have to kind of dive into the actual data to figure out, is it slightly more bullish? Is it slightly more bearish? So this is all stuff that we're going to obviously be talking about throughout the day today. We're going to get a little bit more clarity tonight. And then I think we're really, for the remainder of the week, we're going to get a bunch more clarity. Because don't forget, we're expecting China, Mexico, Canada. We're expecting to hear from everyone tomorrow. And we're also getting initial jobless claims. And then on Friday, not only are we hearing from Jerome Powell, who right now everyone's going to be asking him questions about monetary policy. Are you going to jack up the Fed fund rate? Are you going to bring it down? Are you going to bring it constant? What are you doing with quantitative tightening? Are you going to take your foot off the economy with respect to that? Or are you going to jack it back up? Or are you just going to let the balance sheet burn off? Like, what are you doing, bro? That's all on Friday on top of the unemployment report. So not only are we expecting to hear tonight and for the remainder of the week on this whole trade war situation, but we're getting key macroeconomic updates, and also we're hearing from the Fed. So now until literally market close on Friday, most likely going to be crazy. With that in mind, I mean, we've been in this high vol environment for quite a while now, but just in case you're new, I do want to remind you, this is the time, if there was a time ever to be sizing down and playing with like a very clear cut unit size and not over leveraging yourself, you're in it. This is not the time to swing big, because you can swing small, and if you're right, still get a huge return just because we're getting such massive moves. I truly believe there's not the biggest advantage at all to be swinging big. You're just taking on risks that you're probably not necessarily appreciating. So that's kind of the setup. Obviously, a lot of trade war talk. I do want to remind you, we're getting other employment numbers. Private companies added 155,000 jobs in March, more than expected. So we got those ADP numbers this morning right here, 155 versus 118. President Trump, for some reason, they have 15 o'clock. It's not 15 o'clock. It's later. So I think they actually mean 16 o'clock. I think that's a little bit of a typo. I want to be clear. As of right now, President Trump is scheduled to speak at the Rose Garden at 4 p.m. Eastern, right when the market closes. From a game theory perspective, you might want to argue that's bearish. Generally not the most stoked for people to be announcing things when the market, at least the pit session is closed. There's liquidity issues. So, maybe. I mean, the last time he was speaking when the market closed, that's when he announced the tariffs on vehicles, on automakers, and it was kind of a nothing burger. So maybe we don't want to lean that far into game theory. But regardless, I do want to show you tomorrow initial jobless claims and non-manufacturing PMI and prices, Friday, the unemployment report, and then also Powell. So this is all on top of the trade war stuff. Now, with it, There are some things I personally use to guide myself on what side of the trade I should be on, and one of those is Piper. Piper fired off yesterday, bullish 4 out of 5 confidence, 1045. This was a 0 DTE trade. The minimum capital you would have needed was $350, and it returned 100% of the premium, aka $50. So Piper right now on a very, very nice hot streak. I personally didn't take this trade. Instead, I just bought calls. It was a smaller position. I knew I wasn't swinging it. I'm not really that big of a long premium 0 DTE trader. So I got in, it pumped my way, it started pulling back against me, and my stop got hit. So I made a nice 2K, which obviously if you were in that would have paid for more than 3 years of you being in the Discord. Remember, the Discord, the first month is free. If when you sign up, you use that code Goonie, the entire first month is free. You get my trades, the Piper signal, access to the previous lectures, access to the voice chat, access to other trading members, other Goonie members' trades and their thoughts and their input. You get full access to everything for an entire month, and the entire concept is I just don't want anyone to feel like they got. I want everyone to be like, okay, yes, I know what I'm doing. I know if I like it. And if you like it, great, stick around. If it's not for you, if it's not your cup of tea, just make sure to cancel your account within the first month, and you're never going to be charged anything. I just want everyone to have a riskless opportunity to see if this is the community for you. And even if you don't want to become a supporter, if you want to be a member, which is the free tier, you still get this newsletter. So even for 100% free, you're still going to get stuff every single Sunday to your email inbox. I break down the previous week, all of the earnings, all the major macroeconomic events, and then I give you the seasonality. I do want you guys to know that over the past 27 years, the better part of 3 decades, on this day, Wednesday, April 2nd, the Bulls have won this day 70% of the time. That is a 20% edge with a pretty nice profit factor of 2.4. Here's a look at the hypothetical equity curve you would have if you bought at open, sold at close on the S&P 500 futures market. Pretty much bottom left to top right type of movement. Now, is this the end all be all? No, it's not. It's seasonality, and it's not like on this day every single year we have some president announcing tariff, trade war stuff. So yeah, you might be able to say, you know what, I understand what's going on with seasonality, but today in your mind, you can maybe picture it to be a little bit different. That is completely fair. So I just wanted to show you that. Tomorrow, from a seasonal perspective, once again, not the end all be all, just tells you about the tailwinds and the headwinds depending on your position. Tomorrow is a bit more bearish, and then Friday is a bit more bullish. So I just want to let you know that. On CNBC, they currently are running this article of live updates, Trump finalizing tariff plans as U.S. trade partners brace for impact. So we'll be able to come back to this throughout the day to see if there's any major breaking news. So I just wanted to call that out, especially if you're on CNBC, just if you want to see kind of a live update. So just want to put that on your radar. But with the leftover time, I do want to do a quick review of today's setup. So let me update this. Obviously, shout out to Spot Gamma. Right now, you can see we are in quite a bit of negative gamma. Remember, negative gamma means that when price moves, we're really going to get moving. This is slippery price action opposed to positive gamma, which is a lot more of a sticky price action. So when you see all this red, what you need to know is, when we move, we can really get moving with a little bit of stickiness around 5550 and around 5,600. So those $50 increments providing a little bit of positive gamma. We can see that there are some sold calls. We have some long calls. So this person is betting that the market will be below 5,550. Obviously, sold calls, long calls on top. I guess it could be, no, the direction that it is, this is definitely, I would really guess, a call credit spread position. We see some action down at 5,500. That's obviously quite the stretch from where we are right now, but definitely not out of the question. So anyway, lots of negative gamma. And then by the time you break down all the biggest open interest, you're going to get these key levels. So I fully understand that right now we are slated to open at 5571. So roughly where my cursor is, all the way down here below this low that we saw at 3 p.m. yesterday, we're opening about $1 with respect to the SPY above yesterday's low. We're opening here. That means we are opening in the bearish territory. Right here, this white block, this is the transition zone. We're really above 5,640, specifically 50. That's where things get noteworthy and how bullish they could be in the short term. On the flip side, below this transition zone, below 5,615, this is where the bears start to dominate, and they really dominate below 5,600. And as you can see, we're opening up at 5,571. we are without a doubt in the short term opening up with the bears in control. And what I'll be looking for is to see if there is either a pump and a rejection at 5,600, or if we do start to sell off, I want to see if this area can hold. There's quite a bit of support between 5,550 and 5,560. If that does not hold, we are talking about 5,500 flat. This is the next level. Oop, right there, 5,500 flat. That's if this zone does not hold. So scheduled to open right here. If there is a pump out of the gate, watch 5,600. And then if there's a sell-off, look for this 5-point region, which is two key open interest levels, but it's also yesterday's low value at 5,558. So watching this zone for the bears, and then watching this first zone for the bulls if we open up roughly where we are right now. So if you're curious about these levels, obviously the green, the red, and the white are the high, the low, and the close of yesterday, and then all the like yellow golden lines are the key open interest levels. That's where there's a sizable amount of open interest according to the 0DTE chain, and actually some further out stuff as well. But what I'm looking at mainly is this transition zone. Above it, I'll be looking for some bullish opportunities. Below it, I might be looking for some bearish opportunities. I do want to be clear, I'm probably not going to be opening any swing positions today. I might do some quick scalp trades to get in, get out, but I just don't really feel like taking on the risk of swinging it through the Trump discussion, the Trump announcement. It's just not where I think it's viable to be playing right now because I have no edge. It's a 50-50 flip. It either works for you or it doesn't, but unless you have some sort of political connections, I don't know what your mathematical edge would be. So for me, I just kind of wanted to explain my mindset on that. But here, all right, I have the 1 minute open. You guys see the chop zone. We're going to wait for that. Right now, price momentum is bearish. 5 minute, 10 minute, 30 minute, 4 hour, 5 minute, 10 minute, 30 minute, 4 hour. So price momentum is bearish. We don't know price structure, and we also don't know options flow quite yet. But obviously, as soon as the market opens, I will be showing you that. All right, let's get rocking. The market's going to open up in about 15 seconds. Remember, shout out to Take Profit Trader. Use that code GOONY to get 30% off. Never pay an activation fee. And right now, this is the best offering for sim to funded trading. So if you're looking for the best one for futures, this is currently the best deal you can get. So check that out. Pinned to the top of chat in the description of the video. When you're checking out, don't forget to use that code GOONY to actually get the discount. And on that note, dingity, ding, ding, ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Remember, remember, it's just money. You can't take it with you when you go anyway. It's so cool that gamblers got their own holiday. I'm stoked. Tesla getting beat up, down 5.3% on poor delivery numbers. I saw someone in chat saying the delivery numbers aren't out. You might want to check your favorite news source because they are definitively out. They are definitively best deal on Take Profit right now, that better than Apex. Yes, for this moment in time. And the deals change often, but like if you were to buy it today, that would definitely be the best deal. I'm seeing a lot of red except for vol, which is picking up. I'm seeing a lot. Whoa, look at that gap down. Jesus. All right. Well, clearly we are below the transition zone. We are in the bearish zone. We're below this first target. So that was a breakdown. And the fact that we're not quickly pushing up to it is a little bit concerning. If we continue to capitulate, I'd be watching this 10-point zone right here between 5560 and 5550 right here. Basically right around yesterday's low. This is where I would see the first level of support, and then the first level of resistance is up here at 5,600. Obviously, I'm not playing anything out of the gate. I'm definitely not just randomly mean reverting it, because look at 5, 10, 34 hour, everything's just bearish. So yeah, maybe it does bounce, but that's a very evident counter trend shade that I personally just believe I have no business being involved in. So I'm not going to be involved in it. If anything, what the trade I would like today, if it happens, is a push up to 5,600 and then kind of a failure there, and then playing a rejection kind of back down to yesterday's low. That's kind of like the first thing that jumps out to me of interest today is a push up here. It gets messed up. Options start to drop. Price starts to drop. Play it over, risking the recent high, and then targeting all the way down here. That's, I guess, where my mind first goes. Maybe the market's going to give it to us. Maybe it's not. But we're going to sit here and ideally be patient and see what the market does have in store. Lots of red over here. Here's the initial look at the options flow. SPY, a little bit of selling out of the gate, then a bit of a pop looking at the MAG 7. A little pop, a little selling, a little pop. Now it doesn't, literally in real time just dropped. So it tried to get going there, but lots of volatility, lots of vol in the system. SPY is looking a little bit stronger than the MAG 7. The MAG 7, literally as I turned it over to this, got hit there. So just let all these opening orders clear out of the system. I truly believe, especially as a retail trader, you're not going to have much edge trading this early in the day. I've done so much modeling of just like the opening minute, the opening 3 minutes, the opening 5 minutes, and it's really, really hard to find something that has an accuracy hit rate over 50%. Half the time you're right and you seem like a genius. The other half of the time you're just completely wrong and you get your teeth kicked in. I find it, and this is just a personal opinion at this point, I find it way, way easier to let those first 15, 20, 30 minutes play out, because that's now you have the advantage of seeing where all the big guys are putting their money and how they're playing the day. If you're trading right now, you're trading in the middle. Like you're the little guppy fish trading in between all these giant sharks, these giant whales positioning themselves for the day. I just don't think that there's much of an advantage. I don't think there's much of an edge. I think you're kind of, if you're firing from the hip this early, especially getting into a position, it's one thing to close out a position. Let's say the market gaps in your favor and like, no, I just want my money, or if it gaps against you and you just want to cut your loss. I get that. But talking about creating a new position this early in the day, I can't say I don't. Like, I do know of people who trade this early and they have good systems, but it's few and far between. It's a very, like, right now, if you're not a profitable trader, you're not going to all of a sudden become profitable by like, yeah, I trade right out of the gate. Like, it's just not going to be your time to do this stuff. It really isn't. Unless, like, maybe you're disciplined enough and right out of the gate, we're just at key levels and you're like, nope, I'm buying there, I'm selling there, and you just have really tight risk. Maybe you could make it work. But in terms of like, what's an easy way to trade? It's not an easy way to trade. It really, there's far, far easier ways to trade. So if you're a person who gets ants in your pants and you want to trade as soon as the casino opens, you got to just calm it down a little bit. You just got to calm it down a little bit. What about apes who are long, Matt? What are you talking about? What are you talking? What about apes who are long? Mike, are you high? What the fuck does that even mean? Mike, I need clarity on this question. What about apes who are long? Once again, I think you've been engaging with the devil's lettuce a little bit too early today. A little bit too early. I want to be a guppy when I grow up. Hey, anything's possible. All right, we are getting that first push to this target right here, 5,600. On the SPY, it's just below 558. It's like 557. Like 75. And remember, that correlation changes every so often, and that has to relate to some nuances of the fact that SPX is the theoretical value while SPY actually has the underlying. So there's some lag in terms of the buying, the selling, and there's some friction with the transaction fee. So it's not always the exact same ratio, which makes it a little bit more difficult, but that's why your life's going to be way easier by just watching SPX. Remember, big money doesn't trade SPY. So if you want to know where the actual support, the actual resistance, the actual key levels that people are reacting to, it is on SPX. It is not on SPY. SPY is very much something that the retail audience engages in. And if you're looking at big money, big institutions, big hedge funds, the big money players, they're playing SPX. They're not playing SPY. So if you want to trade SPY, have at it, but you should be basing it off the key SPX levels, the real index, not the ETF created to track the index. And like I said, the reasoning for that is just that's what big money chooses to trade. They trade mostly SPX, then ES, the futures contract, and then below that would be SPY, and then below that would be like XSP. But it's very, very far down the list. If you want to know the key levels, if you're watching the SPY and you're like, why are we turning at this level? It's like a random ass level. Good chance that's a majorly important level on SPX, and you're just looking at the wrong chart. All right, we are at this level. I'm curious if it's going to be able to keep pumping. And we might get a pump back into the transition zone where this is the chop zone. Remember, below it, I'm generically bearish. Above it, I'm generically bullish. The fact that we recovered 5,600, if this can hold, okay, the bulls are fighting back, or maybe the bears are just taking their profits pretty early today. Below 5,600, it is dangerous for the bulls. That is very much where the bears want to be, but that was a strong recovery. And more specifically, we can find out, whoa, Mag 7 is ripping. It's more so people buying calls. Some puts are being closed out. And then right here, looking at the S&P 500, 0 DTE calls like no other. This is it's so perfect. This is big money. This is a giant algorithm. This isn't just people in unison randomly saying, oh, I want to buy, I want to buy. This is like, it is almost like perfect order execution at a very specific cadence. What you are seeing right here is a large player or a grouping of large players very methodically pushing this market higher. I mean, it's like a perfect stepping stone. You could just see basically every 30 seconds, every minute, every 2 minutes, clearly bullish orders are hitting the market. Eventually, this system's going to trade all the money that it's expected to trade. So from there, I'm curious to see how it's going to play out. But I mean, that is like literally picture perfect. It just stopped. So basically, it looks like this algo got flipped on at 9:31. And it looked like it was done doing what it needed to do at 9:38. So it was about 7 minutes, but like just literally perfect call buying, perfect put selling, both the put delta and the call delta pumping up, and it stopped right there at 9:38. So let's see if that trend continues. It easily could, but does anyone find it surprising that it concluded right above this key level? Right above it? As in, well, first of all, it's silly to chase these pumps out of the gate when you're like, oh, wow, this already moved, whatever, 30 points. I got to chase. No, you don't, because you never know if this is just going to flip on you. You don't know if this trend's going to continue. And all I can tell you is that 9:38, the trend has not continued. So would I be chasing here? No. If I wanted to chase, which chasing in general is pretty fucking stupid. But if you're going to chase, you better see the options are like supporting that, like as in they're picking back up. But you could see that the options flow turned off and has not recovered. If anything, we're just kind of going flat right now. So actually people started to buy some puts right there. So people are just reacting to this. This might get faded. It might pump. You don't know. And at this point, I just don't see much clarity, and the risk reward's just not there, because if you were to take this pump, what's your risk point? The intraday low, just to ride it a little bit up into here into the chop zone? The reward is far less than the risk. So what's the point of that trade? And then on top of that, we actually see options turning the other way now slightly. Right here, people started to get puts on the Mag 7. They're dumping their calls. Same thing here. So to chase this to the upside, not if you're just looking at price, that's a dumb play. And remember, a dumb play is not based on do you make money or do you lose money. And I know that's how a lot of retail traders think about everything. It is very possible to make money off of a dumb, stupid trade and lose money on a very good trade. It's all about the decision, not about the result of it, because once the die are in the air, once they're flying through the air and you're waiting for them to hit the table, as in the trade's already on, you don't know the next bar. You don't know if someone's going to come in and have a giant bullish position, a giant bearish position. You don't know if there's going to be a random tweet. All you can do is judge it on the quality of the decision you were making when you got in the trade and the management of the trade, whether for your risk or for your profit, whatever. But it's all about the quality of your decision getting in. And right now, it's not a quality decision to be chasing an intraday high heading into a Liberation Day announcement when all of a sudden I see price is very strong. Clearly, bottom left, top right, like price is ripping, but options stopped. If options kept going, that'd be a different story. So would I be putting on a trade right now? No. Not at all. Now, on the other side, had I been in early, maybe you took like this random trade, which I don't like that. But if you did, would you keep riding the trend? Yeah, of course, you ride the trend as long as it's intact. And right now we're just making higher highs, higher lows. So if you already have this bullish position, would I be getting out? God, no, I wouldn't be getting out. I'm riding the trend as much as I could, but that's a very different thing than creating a new position, because if you're already in, well, your stop should already be at break even. So you're taking on no risk. If you were to chase this, your risk is all the way down here. So you're taking on too much risk. So just because something looks bullish or bearish, that doesn't mean it's appropriate to trade as a bull or a bear at that moment in time, because you have to consider your risk. You always have to consider your risk. And actually, we might be getting a little bit smacked here. we're running in. So basically this psychological level, and then we're running right into the DEX transition zone, and that's providing some resistance. And so is the 1 minute EMA cloud. So there's some choppiness afoot right here. So let's just wait. You definitely don't need to rush anything on a day like today, and you shouldn't be rushing thing on any day. But see how the Mag 7 flow turned off at 9:38. That big bot system just stopped, and then people started to react flat, maybe a failed pump. But yeah, this lasted for about 8 minutes, and it turned off. It just turned off. Same thing with the SPY. We ripped all the way up till 9:38. We pulled back, put in a lower high. So this might be it. This might be what gets faded. On the flip side, it's also possible to put in a new low and then rip. But first, we have to see that. I think it's kind of pointless to guess on what the trend's going to be and just play what the current trend is and hope that the current trend continues. So patience. I feel like my major job recently is just reminding people, just wait. The opportunity, it's going to be there. We don't need to rush anything. We don't need to be silly. When I do that, that's where I generally lose all of my money and make really, really stupid trades. Really stupid trades. But while we're waiting for this to play out, while I'm waiting, I do plan on trading my futures accounts. Can you guys see this? Yeah, right here. I haven't traded anything yet today. So I'm attempting to keep myself patient, attempting to wait for that perfect opportunity. Ideally, like a sniper, I take one perfect shot, I make my money, I move on with my life, but we're going to see what the market gives us today. So I plan on trading this. Maybe if I see an interesting setup, maybe I'll do like some sort of 0 DTE options trade. But honestly, I don't mind just waiting for tomorrow and waiting to see, kind of letting all of the dust settle on today's trading action, what we have the announcement right when the market closes, and kind of seeing how things look the day after, if you will. So I just don't really feel that much pressure to do anything. Potential little technical breakout, little technical continuation going on right here. Little technical follow through right here. We pump, we pull back, we put in a higher low. We're getting that follow through. Do options agree? They very much agree on the Mag 7. They don't agree on the S&P 500. Be careful. Tech is showing on a relative basis more strength. The Mag 7 just started ripping new delta high, but for whatever reason, the SPY is lagging slightly behind. Maybe if we give it a minute or two, maybe it's going to pick up. Actually just got smacked. Be careful here. We're getting a little bit of a mismatch. The Mag 7 showing quite a bit of strength while the SPY literally just got smacked. What happened? Someone bought a lot of 0 DTE puts just now, 9:45. The puts, this delta related to the 0 DT put dropped it. And remember, as delta drops, that's more bearish. As delta rises, it's more bullish. So you can add negative delta to the system, as in drop delta, by either selling calls or buying puts. You can add positive delta to the system by either dumping your puts or by buying your calls. Both of those actions add positive delta, or they push delta higher, the net effect of adding positive delta. And then the first example of buying puts, selling calls, that would drop the delta, the net effect of like adding negative delta or subtracting delta from the system. As your delta goes higher and higher and higher, that is thought to be more bullish, just because it's literally more bullish positioning within the market. Whether it's more bullishness or a lack of bearishness, whatever, it's still net relative bullish improvement. And then the opposite would be true. If the delta is dropping, once again, via selling calls or buying puts, that drops delta. That makes the option structure a bit more bearish. And obviously trends, it could get even more wild. What indicators do you use on your charts? I use all of them. All right, the 5 minute and the 10 minute and the 30 minute are actually, this push is big enough that it's actually trying to go bullish. So we started off bearish, and right here we got this push up to the top of the cloud, push up to the top, push up to the top. 4 hours still bearish, but the 5, the 10, and the 30 are now bullish. The 5, the 10, and the 30, wow, what a recovery out of the gate. How close are we to this? Okay, we're trying to battle to get back into this transition zone. When I say this transition zone, there's a couple things you need to know about it. This is from an options perspective. This is choppy. This is whipsaw. This is where all of a sudden both the delta and the gamma are transitioning from either positive, negative to positive. This is the giant battle zone. And right now we opened up in the bearish territory due to actually a giant increase in 0 DTE bulls. They're pushing us right up past a key level. We put in a higher low, and now we're into this battle zone. This is where the market makers are going to basically be representing less influence on the market because it is such a choppy zone. So really, when you're in these choppy zones, it's that choppy because market makers don't have to do shit. They're either waiting for the breakout or the breakdown to properly hedge their book. And then you get an idea of how they're going to hedge it based on, are we in positive or negative gamma? And obviously, what side of the transition zone are we on? But right now, we kind of do get this idea that we opened up in a bearish territory, but we also knew right here that we were in negative gamma. So when you're in negative gamma, prices can move pretty quickly as they have. And you can see we're kind of getting a little bit closer to this positive gamma node. But when we opened up, if you were to look at the 1 minute, if I was to go back to the start of the day right here, you can see we were literally right in this giant negative gamma zone. And then due to all that 0 DTE call buying, we started to go and we went very rapidly, which is a telltale sign of you being in negative gamma. Negative is not bullish or bearish. It just means when you get going, you really get going. And generally, like an ice puck, you slip all the way until really the wall. And in this case, that would be this positive gamma. So this is more of the wall and this is the slippery ice. So we got pumping and we really saw the pump right here on Hero. Right there. Look at all that call buying. It just ripped till 938. But then just be careful on chasing this because at 938, calls have now gone flat and puts are actually getting more aggressive. So we're actually at the most negative put delta we've seen all day. So be careful. The reason the market is holding up right now is because the Mag 7 is so strong. The Mag 7 people are buying calls and the puts are flat. So the Mag 7, really the major 7 tech players and the overall market are telling us two completely different things. When they tell you two completely different things, that is a very evident sign to fucking do nothing. To just wait for them to agree. Either wait for the SPY to pick up and start to look like the Mag 7 or wait for the Mag 7 to break down and start to look like the SPY. But when the SPY is going one way, the Mag 7 is going the other way. That's a classic mismatch because we know that the Mag 7 is the most weighted equities in both the S&P 500 and the NASDAQ 100. So it doesn't really make sense for the things that really represent these indices the most to be doing one thing, and then yet the indices themselves are doing a completely different thing. That's the mismatch. And when there's mismatch like that, and there's like most days when you're trading, you're going to say, wow, that's mismatch, that's mismatch. As a trader, the game of a trader is to sit there for patience until everything aligns to one side or the other, basically waiting for your strategy, your system to have like that perfect setup. And then that's when you trade. It's really never properly explained this way, but as a trader, most of your time is doing literally nothing. It is literally just sitting around doing absolutely fuck all. And some people have the patience for it, some people don't. But I think there's, due to Hollywood and, I don't know, books and various shows and, I don't know, cultural influence, people think that trading is like there and you're screaming all day and it's active and you're just like doing all this shit. In reality, it's not. Most of the time trading, you're just sitting there kind of like listening to music, talking to people on the internet, doom scrolling on Twitter. And it's just because you have to have that patience to do absolutely nothing for a long period of time, So we're going to see how things align. I mean, I see the SPY still going. Are the options looking any more constructive? Okay, they just caught a bid right there. So this might be that higher low, but I'm just now seeing a spike in the SPY while the Mag 7 is continuing in a strong fashion. I'm just seeing the SPY try to pick up right now. So downtrend, potentially putting in some higher lows. In longer duration, the 0 DTE still looking really flat, very neutral, indecisive. But at least it's not bearish anymore. And then we obviously have the Mag 7 looking decently strong. And we are right here having a tough time right at this zone that we called out. This is the start of the transition zone. And right into it, there's more resistance somewhere between 20 and 25. So I cut it in half. Then we have yesterday's closing value at 5633. Then we have another big open interest level all the way up here at 5640. So this whole thing, choppy bullshit. If we can get to the top side of it, it gets interesting. And the bulls really have a good case above 5650. There are open interest levels pretty close, but obviously we'll see how the market ends up reacting to that. There's no 10 a.m. announcements today, are there? No. 10:30 we get crude oil numbers. So if you're an energy trader, you might want to pay attention at 10:30. But to people trading equities and really the overall market, we're kind of clear sailing. The Qs are not that far away from their upside gap fill, and the SPY also not that far away. So both of these might be making a move to like kind of test that red to green move very quickly, just to show you what's going on with options. The Mag 7 still long and strong. The SPY long and strong. 952. I was really trying to wait till 10 a.m. I didn't want to trade too early. This would have been a nice entry right here, 49. Right here. We pump, we pull back, lower highs, lower lows, and then we break that trend. And you know what? I'm saying it would have been a nice trend, but if I was in it right now, even with a perfect entry, I'd be testing after being mad that I was up 30 points and then it comes right back to break even. Thoughts on RKT long term? I have no thoughts on RKT long term. A long-term question has nothing to do with technicals. If you're asking about anything long-term, it just has to do with the fundamentals of the company. And RKT by no means interests me as something I care to look into of like, do I think it's a fundamentally like sound play or company? Might be. I just don't give a shit about it. Is that true? Breaking Canada to remove tariffs if the U.S. agrees to do the same? Are you being honest? I'm not seeing that at all. I don't know where you got that from. Iran, we're ready for indirect nuclear talks with the U.S. EU nations seek to keep the option for 2025 gas storage flexibility. Whoever just said the Canada-U.S. thing, I think you're completely full of shit. RKT got an upgrade today. Upgrades don't matter. If you look at the quality of analysts and like how often they're right and wrong, they're effective. Honestly, some of them would be better off by legitimately just flipping a quarter. So this idea of upgrades and downgrades, I cannot express how pointless that is. And you're going to realize how pointless it is when you look at the actual track record of the analyst. Go search that analyst and see how often they're right, see how often they're wrong. A Canadian official said it on CNBC this morning. I feel like it would be much bigger news and it would be reported. Do you have a link or anything like that, or a title that I could search? Premier Ford Ontario. Well, okay, hang on. Does that person even make the decisions? This sounds like, I mean, it'd be one thing if it was Carney or whatever his name is. The Doug Ford, but who, like, does this guy matter? Does his opinion matter at all? Doug Ford. I'm trying to find it. Obviously I don't know about it. Doug Ford. I'm going to see if I can find it so we could all break it down. Doug Ford, CNBC, tariffs. CTV. What is this? Can I not play the clip? All right. So it looks like he was on Squawk Box. Premier Doug Ford says Ontario would draw. So not Canada, Ontario. So yes, you guys are mostly right. But one little caveat here is this is specific to, I guess, Premier Doug Ford says he's willing to drop Ontario's tariffs. Not all of Canada. This is just specific to Ontario. Asked about the response of Trump's tariffs on a national level, Ford says he believes Canada would drop tariffs in the next minute if Trump does the same. So it looks like this guy's more in control of Ontario. And maybe that's part of the reason why we're getting such a quality pump this morning. Maybe. Speaking of that, let me come back to, okay, the Mag 7 ripped until about 9:53, coming down and actually picking up right now. SPY catching a little bit of a bid as well. Hang on. Do I like this trade? Do I like this trade? Yes, no, maybe so. Fortunately, it's not much risk. So we pumped, we pulled back, barely breached it, wicked it, and then we pumped. If I do enter here, if I'm wrong, it's about a 25-point risk, so not the end of the world, especially if you're trading one contract. Kind of double checking what I do and what I don't like. Obviously, we have a nice pump to the upside today. The 15-minute Orbo that we spoke about yesterday, obviously we broke to the upside. The 945 high was right here, so we pumped it. We're pulling back a little bit. We were just showing some signs of life, but now it's kind of dancing around. I'm a little hesitant to enter on this because I wanted a little bit more strength. A little bit more strength. Oh, we have a little bit of a bull flag, maybe a little bit of a pennant. You could call it whatever the hell you want. Well, la-ti-da. Do I want this trade? Yes, no, maybe so. Yes, no, maybe so. All right, we're taking the breakout.
Order submitted.
We're ripping it now, Lucy. We're ripping it now. All right, obviously, let me review the reasoning for this trade so you guys can see what I saw. Basically, let's do a quick review of the major things. First of all, price structure. Higher highs, higher lows. I would define that as the bulls being in control. The overall price trend of the day is up. Momentum, 5-minute, 10-minute, 30-minute are above their cloud. 5-minute, 10-minute, 30-minute above the cloud. So price structure, higher highs, higher lows. Price momentum went from bearish to bullish. And then obviously the final thing I like to peek at is the options flow. Clearly the Mag 7, bottom left to top right, stalling out a little now. I'm hoping that it does continue. Looking at the S&P 500, it was picking up. I didn't realize, I thought it was still picking up here flat. I mean, overall we're pushing up, but things got messy starting at 942. So this might be the one thing that kind of says, hey, hang on, maybe you need a little bit of a better entry. Quite a bit of strength in the Mag 7, which works for me because I was trading in the NASDAQ. This is more of a B plus setup because right now I just need to see more in the S&P 500 options. And then that's kind of going to be something that I would actually consider an A plus setup, but I would want to see that a bit stronger. So pretty much everything aligning, but we could definitely do for a little bit more strength here. And then also, I guess another thing that maybe is bringing down the quality of this trade is we are right at this transition zone. And as of now, it's clearly been serving as some resistance. But we'll see how it goes. We just got a little bit of a flash there. All right, I'm moving my stop up. I'm long at 52. I'm risking 12, so that's a risk of 40 points. I'm risking $800. And this is more of kind of an aggressive stop following methodology. So what I mean by that is if I see it turning, like I want to ride the trend as much as I can because obviously my goal is optimal amounts of money. 52. Hang on. I got to do some math here. 52.75 plus 75, 127. 127. All right. I'm just updating some of these accounts, the take profit ones. Just lowering their target a little bit. And hopefully I could do this quick enough. Okay. So basically these accounts here, these bottom 5, because of the consistency rules, I do have to have a lower max profit of 1.5K, which is why I updated those, but then didn't update the Apex, which I actually have, theoretically, I could go for more money, upwards to about 3K. And this just has to do with their various consistency rules. So that's why these ones ideally will hit very, very soon. These bottom 5, I have 25 accounts. These bottom 5, the take profit ones, just because I'm attempting to pass the test, I moved all their profit targets to 28. So ideally locked in, and then I could ride these 20 a bit more. That's kind of the mindset, but let's see what the hell is going on. Let's see what's going on. Come on, hold 600, hold 600, hold 600. You got it, Bessie. Keep going. Sanity check. All right, we're in this zone. There is a very real test of 5633. That is a natural target to visit the previous day's closing value. That's every single day why I mark it out. So that tells me that we might have another 5 points on SPX, which would be about another 50 cents on the SPY, bringing up to yesterday's closing value around 561. The Qs are right at their closing value, and not far above is the high from yesterday at 473.63. So obviously I'm also watching that. Palantir's going. Tesla, we're seeing some recoveries for sure. All right, but I got to manage this. Come on. I don't want too far of a pullback. I don't want too far of a pullback. At least let me lock in those take profits. Let me lock in the take profits. Come on. Come on, Tonto. Come on, Tonto. Come on, Tonto. You could do it there, buddy. You could do it there, buddy. Just 28. At 28, that's where I have all these orders right here. You could do it. Nope, keep going that way. That's what I want to see. A little bit of a pump. Little bit of a pump. You got it, brother. You got it, brother. Hold steady. Market's being very indecisive of if it wants to give me this money or not. Very, very awkwardly indecisive about it. All right. Can we get a little bit of an overshoot of 20 here? Nope, apparently not. We've now run into 20 multiple times, tagged it. But I do like that it's holding 600, so I can't really complain that much. Am I bummed out that it just didn't quickly fill that so I can go back to managing just my other ones? Yeah, that would make my life a little bit easier, especially because I have different orders up, but can't complain too much because at least it's not violently going against me. At least it's not violently going, as I say that, and it dips a bit. All right, we're getting that 600 test. I would very much prefer that 600 holds. 19,600 flat. Come on, hold it. Don't pull back. That's silly. Don't do that. Keep going. Keep going. Let me quick do my sanity check of what the hell's going on. So the Qs are battling it out at the red green while the SPY is right below the red green. So I'm still looking for SPY to test that. I feel like on a test of that, maybe the Qs will be pushing their high from yesterday, which means I could lock in my profits. So I'm kind of paying attention to that. I'm also awkwardly trying to pay attention to options right now. The Mag 7 pumped pretty hard. We're now going flat. Looking at the S&P 500, same thing, pumped pretty hard, fading a little bit, but it's not like a huge give back. It's not a huge give back. So I think I'm good. I think I just need to remain calm, cool, collected. It does feel like I'm on the right side of price structure, price momentum, and options flow. Just looking for this overall trend to continue. And ideally, I'm not getting caught up in an official trend reversal. Obviously, that's what you use your risk points for, just in case it unfortunately does reverse on you. But we'll see. We'll see. We will see. Oh, dude, I forgot we have this Japanese lo-fi music. I forgot. A little something to calm the nerves while we're slinging some serious size here. Okay, I'm not the biggest fan of this failed movement shit. Because now what I need is an actual trend line breakout, because now we do have a lower high and lower lows. Maybe we'll get this retest and this follow through, but I need to be careful about the unrealized high versus the realized, just for drawback purposes. Stop it. Shit. How high was it? 20. It's already pulled back 40 points, so it's an $800 difference. Son of a gun. This is the tough part, is when you don't have any buffer and you have to stomach these types of things. When you have a buffer, it doesn't matter. At that point, I'd set my stop to break even. If I get tagged, I get tagged. Unfortunately, you can't trade that way out of the gate. You can do that as soon as you fill your whole buffer up. On a 50K account, it's 2.5 and you're pretty much good to go. But it just sucks otherwise. Like this right now, just this, the difference between the unrealized high and the realized high, obviously it is not favorable for you as the trader. Oh, and it's to the point where I feel like it forces you to take on extra risk. I just don't enjoy this part of it at all. I don't enjoy this at all. Because what I would do if I were trading my own account, or if I had enough buffer on this breakout here at 10:01, I would have moved my stop to break even, and maybe I would have taken the profit on this vomit, or at worst case, I would have used the stop at break even. Like, without a doubt in my mind, when I go that many points in favor, it's kind of that whole fishing methodology that I pitched to all of you. Without a doubt in my mind, that's how I would have done it. Oh, now I have to do some backwards math. Fuck, I don't even think, because if this, I have to take on more risk than I want on this trade. I fucking hate doing this stuff. I absolutely fucking hate doing this. Because what I have to do now is, how many points did it go in my favor? It went 70, 1,400. So that's another 50. 50, that would be down here at 19. Yeah, it just, I hate, that's like, and I get why they do it. They do it that way because they obviously want more people to blow out. So like, I understand the concept of the rule, but it's just in that unique circumstance when you're first growing your account, you really can't use the stop management that you'd like normally want to use. No stop is clearly downtrend, extremely short, bro. You should have cut it at, no, once again, that's not how it works. See, there's a lot of people talking right now, talking about normal stops, and I get it, but this isn't a normal stop because of the buffer. So I think there's a lot of people in chat right now who just like literally don't understand the concept of building out a buffer on this sim to funded. Once again, if you're trading your own normal account, I've already stated this like 8 times and clearly people are not getting it. That's, yes, the proper way to do it. I don't disagree at all. What I'm saying is you don't understand the math of the buffer build out for these sim to funded accounts. Like legitimately, you're just not understanding it. I in no way disagree with you in terms of trading your own account, that like I've already said it. Like I feel like now I'm just a broken record here of saying a different thing. How far down? Now I don't even know my math because I can't base it off my account value. I can't base it off of this. I have to base it off of this unrealized high as if my account was there, which now I can't even do the mental math for it. Dude, this buffer build out is by far the most difficult fucking thing. I was wondering that too. Thanks for clarifying. I mean, as soon as you do it once yourself, it'll be very, very clear. At the start of these accounts, I would argue you're kind of incentivized to trade them differently than you would your own accounts. And once again, that stops basically after you fill out your buffer. So once you get like above whatever, 2.5, 3K, something like that, at that point you can return to doing what you would normally do because you don't have to worry about that difference anymore. But if your account does not have a total net profit of 2.5, that's where it gets a bit hairy. That's where it gets a bit hairy because the blowout rule is a 2.5K drawdown, but it's not based off of your realized high. It's based off of your unrealized high. So let's say, for example, you're in a trade and it goes up 2.6K, just above the buffer, and then you don't lock it in and it comes all the way back and you hit your break even. You actually blew that account out because the 2.5K drawdown is based off of your theoretical perfect high, not your actual trading locked in profit high. So because of that, it is something you have to consider until you get up to that, until your realized and your unrealized high are both above that 2.5K. But of course, if your realized is, that means your unrealized is. So it's just something you have to consider when you're first doing this. And then once again, once you exceed that, then you could go back to like what you need to do. He was up, but almost no drawdown. Well, because when you go up like that, if I were to get out here, remember my unrealized high and my realized would have been off by about $400, which that's a manageable one. There's probably a fair argument. Like I could have taken that as a protective thing. I honestly just thought we were going to retest and I was waiting for like either a failure of this trend line. I didn't anticipate it coming back this far, but once again, that's the point of like not predicting in these markets. So I was like, oh, maybe we'll get this. And if it fails, I was probably going to get out there. But the goal, while you're below the buffer zone, and each account size has a different buffer zone, while you're below the buffer zone, you want to keep your realized locked in profit as close to your unrealized high as you possibly can. Because as that delta grows, that means you actually have less leeway to trade with. So it's with that in the back of my mind that I was kind of hoping to lock in right at that 28 value. And as you can see, we got up to 20 and I had those pending orders at 28, just because if you are using more of like a profit target mechanism, if you're always just hitting your profit, your unrealized and your realized are effectively going to be the same thing. So that basically means if you're a trend following trader and saying, oh, I just want to ride the trend, it's just mathematically a difficult thing to do when you're first building out the account. I guess I'm stressing that enough to let you guys know that it really does change. Like as soon as your realized high is above the buffer amount, it no longer matters. This is a very specific, unique, nuanced case for when you're first trading the accounts, which is the most difficult stage of all these accounts, is when you're first dealing with all of them. It's the most difficult part. But once you could get over that, it does get easier just because you don't have to start consider so many things. You don't have to consider so many things. But I'm hoping that this little profit taking, this little rejection right here at the close from yesterday on the Qs and this little undershot on the SPY, I'm hoping that's enough and we just bounce here. Hoping. But see how we ran right up, got smacked at this open interest level, and we're just struggling at this chop zone. That's exactly why it's called a chop zone. That's exactly why I call it out to you. It just gets this difficult. I am trading 3 Apex PAs and was wondering why unrealized P&L is still 0. Now I understand why your unrealized P&L is still 0. That doesn't make sense. Your unrealized should be moving based on unrealized. I don't know if you're looking at the right column. Your unrealized is going to be changing quite a bit. The idea is the drawdown is based off the unrealized high, not the realized high. And that's all in the FAQs and whatnot. So like, I guess I'm calling it out because some people get confused if they blow out early and they're like, whoa. Like I still have money in the account, and just, it's because of the pullback off the unrealized, which is why I'm taking on more risk than I normally do. Literally as this was happening, I was telling you guys, nope, I'd rather put my stop at break even and not have to be sitting here praying that it comes back in my favor. Trying your code on Vanquish, please explain the basic rules. I'm pretty experienced in options. I'm just trying a prop account for the first time, please and thank you. Well, Vanquish is a sim defined, but like right here, what you see with take profit and then also Apex, this is for futures. Vanquish is for options, and the basic rules are you have to hit a profit target without having a certain unrealized drawdown. Then you go from the eval stage to the performance stage, and then in the performance stage, if you trade well, you can get actual money. But that's just the generic rules for all these sim to funded companies. You take a test, you pass the test. If you pass the test, you go from an eval account to a performance account. Once you're on a performance account, if you trade well and follow the rules, that's how you can get the actual payouts. But for the specifics of the rules for any of these websites, they're all very explicitly clear on all of their websites. Happy Liberation Day. Well, maybe my risk will be worth it. I am managing the take profit and the Apex accounts slightly differently just because of, once again, the nuanced rules related to both of those firms. But I'm hoping that this breakout that we're seeing right now actually holds. Looking at this trendline break that literally just occurred at 1017, seeing recently some higher highs, some higher lows. I'm hoping that this just is not a fake out. Obviously, I want to see the market back above 19,600. I'm hoping that the trend that was identified early this morning, price structure bullish, price momentum bullish, and then looking at the flow, here, let me show you the 30-second. SPY's a little bit more choppy. Not a fan of that. While the Mag 7 was strong, but then I got caught up here at 10:06. I was trying to ride it up. I needed a little bit more to go to lock in at least some of those, and then obviously it got hit. But maybe I'll get fortunate with a recovery. It depends on what people do or don't want to trade. We're at another key open interest level, somewhere between 5620 and 5625. Those are big open interest levels, but I believe that the market has I know it statistically has a high proclivity for testing the previous day's closing value, which on SPX would be 563306. We haven't hit that yet. My assumption is that if we hit that, there's a very good chance that we'll be at least back to the intraday high on the Qs, and maybe I'll just manage it there. But once again, I can manage it here because if I'm getting out, that means my realized high and my unrealized high will effectively be the exact same thing, which is what I'm looking to do. You will be fine. I'm short till Friday. I don't think that's a smart move. I don't think it's a smart move to be swinging anything right now. You have no idea how this news is going to break. Like, why are you taking... Like, there are far better edges in the market than a 50-50 coin flip. And that's right now. If you're currently swinging a position for this week based on what's either happening today, tomorrow, or Friday, but you're like, yep, I'm just going to kind of like power it through. What is your edge? You're literally just flipping a coin. And if you flip a coin, your trading career is not going to be a profitable one at all. Like a 50-50 shot, that like just look for better opportunities. I fully disagree with a bull or a bear thesis as of right now, holding it for the remainder of the week. Why not just wait for the news to come out? This is the same people who are like trading huge positions right before big announcements. It's like, what's the edge? Like, what is the edge? 80. Trump is my edge. Well, Trump's been your edge this year, this calendar year, if you're a bear, because the market's clearly down. How about swinging a sold option based on vol crush? No, don't like that either. It's still a swing position. Why would you do that? I mean, you can still get knocked from out of the money to in the money and then blow that position out. All we know is we're looking for a pretty considerable move between now and the end of this week, now and the start of next week. But in terms of what is the direction of it, you're flipping a coin. So obviously, sold premium's a little bit less dangerous because if you did a proper credit spread, at least your loss is capped. But also if you're long premium, your loss is capped. So both of them are capped. I'm holding my bullish position to the end of the month. I like that a little bit more just because you have more time. So you're not so sensitive to the movement today, tomorrow, the next day, something like that. So I'm a bigger fan of that play. But to play a swing position from now to Friday, like let's say you have a Friday expiration or a Monday expiration, something like that, I am not a fan of that whatsoever. We're right back to that initial breakout point, 80. Oh, how do I want to do this? I am making a good chunk back of the realized versus unrealized. All right, I guess I'll give it a second. and maybe the overall trend will persist, but I am looking for the SPY to go up to 560.97, so about, I don't know, a little less than $1. And then I am looking for the Qs ideally to go back up to 473, currently trading just below 472. So looking for the SPY to go up $1, looking for the Qs to go up $1. The equivalent levels, that would be about 10 points on SPX, is about $1 on the SPY. And then for $1 on the Qs is about 40 points, roughly, give or take. It's about 40 points on NQ. Is roughly the sizing. So like a dollar movement on the Qs would be 19,600 all the way to 19,640 is roughly the equivalent. But I really need this. Come on. 5 minute, 10 minute, 30 minute. All right. 5 minute, 10 minute, 30 minute. I am trading on the right side of price action. I'm trading on the momentum. I'm trading on the right. Is this a lower high? I hope we're not putting a lower high. That could be a pain in the ass. Okay, so this is actually a good explanation of what's going on right now. I could ditch all these positions for break even. And as a trade, you might be like, that's fine, your account is unimpacted. But it is, because right now my drawdown is based on if I got out at this perfect level at 19,620, because that was the high of the day. Your drawdown is taken away from your unrealized high, not from your realized high. So really, even though that might seem like a scratch trade and you're like, whatever, like it happens, in the current state, just because these accounts are so new and so fresh, it would be impactful. But that's just for now. As soon as my realized high exceeds 52,500, that no longer matters. I only have to consider that situation all the way up to 52.5. And then after that, I don't give a shit about the unrealized high anymore. I just care about the actual number in my account. And we're ideally battling this back up to 600. Nice little trend line breakout there. Let's get rid of that. Let's get rid of that. And let's go to that. All right, so looking to take out 20, and then I still have the profit target just above that for all these take profit accounts, because according to their rules, I have to be kind of specific when I'm passing the test. I don't want to go above 1,500 a day because they have a 50% consistency rule. So I am looking to lock in exactly 1,500, and then I should ideally be golden. But I need to be careful because there might be a rejection right here. So if the SPY gets rejected before my levels are hit on NQ, on this NQ trade, I might need to ditch early. So I'm trying to be very mindful about 5,633, which once again, if you're trading the SPY, that is, just call it 561. So I'm wondering if there's going to be profit taking right here. So I might need to be a little bit quick on the trigger if there is. Before I switch over, here's a look at the flow. SPY is picking up slightly on the longer duration, flat on the 0 DTE. The MAG 7 is now picking up, which is kind of helping me with a little bit of a lift, but I need to just... The die are in the air. Lady Luck is in control now, and we're going to see if I'm going to get this lucky push and follow through. Can I get this lucky push and follow through? Apparently not. Apparently not as soon as I look at it. On a push of a new intraday high, I might use whatever the recent low is as my stop point, because ideally the recent low is close enough to whatever the high is that that delta doesn't matter too much. But that's a big if. I first need to see a new intraday high, and I need to ideally see if the SPY here is going to keep going. Come on. Come on, you could do it. Not trending the way I would necessarily love for it to trend. Yeah. Fuck, dude. These... Not making it an easy trade by any means. Yeah. Double topped here on the SPY, lower high on the Qs. Qs running into clear resistance right at their closing value from yesterday. I still think there's a little bit left in the tank. The game's not over. I still think we're talking about 5,633. I still think we're talking about 561 on the SPY. So I'm trying to give it a second. I'm just worried if the 0 DTE players, my concern is this. is that the 0 DT players, as soon as we hit that, I'm worried that the call delta is going to drop, and potentially the put delta might drop as well. So that's what I'm trying to be like specifically mindful about, just to not get caught up in that bullshit. Oh, we're going to find out. We're gonna find out. We have about 10 points to go on SPX, a little bit less than 10 points, so a little bit less than $1 on the SPY. I would love a little bit of green. Like, why can't we just get one nice pop above it? Just one nice pop instead of just making me sweat. Nope, it's getting hit. Fuck. Yeah, that would be not so bueno for me. That would be officially a lower high. But if we do recover, that'd be a nice trend line breakout trade, trading with the overall trend. You're taking advantage of, I don't know, bull flag, a bull pennant, whatever the fuck you want to call it. And then your risk would be whatever the recent low is. I actually like that trade setup if it were to happen. That's like the giant if of, do you get the breakout? Are you disciplined enough to respect the risk on the whatever the swing low is? So this trend line from 10.05 to 1025, I like that as a long entry, that breakout, and your risk is literally whatever the recent swing low is. And then from there, if you have a specific profit target, if you want to do a measure target, if you want to do trend following, that's kind of up to you. But that's a nice structural setup amongst price momentum, price structure, and options flow. Speaking of options flow, how are we looking right now? SPY kind of indecisive. Mag 7 popped, pulled back, picking up a little tiny bit. This is all still 5-minute, 10-minute, 30-minute bullish on the NQ, 5-minute, 10-minute, 30-minute bullish on the S&P 500. We're just seeing right here, this is such a painful watch. Like, is the SPY gonna go for this red to green move? And if it does, is it going to get quickly rejected, or is there going to be some follow through? This is what I'm actively playing right now. I know that the odds of hitting the previous closing value are high. Not a guarantee, but I'm hoping that I'm on the right side of that trade today. Come on, let's see for this trend line breakout. Come on. Come on. Stop fucking around. Why can't we get some nice follow through? Some nice follow through. Breakout. Like I said, this break is a nice trade just because you have well-defined risk and you're trading with the overall trend. Just be mindful. You might want to be aggressive with your break-even stop because of the upside resistance. And when I say upside resistance, even though we're looking at the NASDAQ, I'm talking about this move right here. We're getting real close to the closing value from yesterday, which might prompt the 0 DT call buyers to dump and 0 DT put buyers to buy. So just be very mindful about this. Here, I'm going to set an alert so we can see, so we get an audio feedback if it gets hit. But right here, 563306, which is about 561 on SPY. And we're right at this trend line break. Come on. We could do it. You could do it, Tonto. You could do it, Tonto. You could do it, Tonto, and it also happens to be battling it out at the psychological level of 600. So we have everything going on right here. We have absolutely everything going on right here. Come on. I just wanted to get into this trade, get out of this trade, and I feel like I've just been battling it for a minute now. A minute. It's just flirting with 600. Am I really asking for that much? Am I asking for that much? Uh-oh. It's not seemingly... I haven't heard the alert go off either. No, SPX hasn't hit it. It got close. It got up to 31, and yesterday's close was 33. So we were getting there. As we were getting here... the crude numbers just came out for all my energy traders. EIA crude oil inventories actual 6.165 million, forecast a drop of 0.5 million. So way more. The inventories way more. Come on, breakout. Shit. All right, on a positive note, if I do close it here, my delta between my unrealized high and my realized will not be much. So I'm back in a territory where I could like manage that because it's not so bad. Come on. Let's go. I just got an alert that SPX did in fact hit it right here. SPY hit it, and right there we are tagging it. Might have another 6-point push up to the top of this chop zone. Remember, above this chop zone is where I think things could actually get bullish on the 0 DTE. And what do we have? Come on, don't close it out. Mag 7 got a nice little pop there. Come on, follow through for me. Come on. All right, these should lock in soon. Right here.
Order
These should
filled.
One of them. Okay. 1, 2, 3, 4, 5. 7.5K locked in. 1.5K on 5 different accounts locked in, but still swinging these ones. So I locked in on 5 and I have these other 20. So that order was sitting there. And now I basically just want to be very careful because we hit a new unrealized high. I just need to be very, very mindful about any pullbacks. All right, stop is now at break even, which I don't necessarily like, but I hope it forces me to get the fuck out if I need to get out. Little bit of an overshoot there. Little bit of an overshoot. As long as the delta can remain long and strong. This is what I worried about of like, are there going to be profit taking on the call side right at that? And then our put's going to be stepping in. As of the moment, I'm not seeing an extreme amount. Price is reacting. So there's a little bit, but I just, come on, hold 600. Hold 600. Come on, turn it around. Make this one an easy one. I had to battle it out. Shoot. Turn it around. You could do it, Tonto. Bouncing off the first standard deviation VWAP. Come on. Hold 600. Hold 600. What's the flow looking like? It is turning now a little bit more. It's kind of exactly what I didn't want to happen. Maybe the flow will pick back up. Maybe the profit. Yeah, this classic just, it makes sense that they took their profits there because that's the play. You play it to the previous day's close, and as soon as that hit, there was probably many people across the land who, exactly what I was saying, they heard the alert or they just had their auto target set, and as soon as that tagged it, some put buying entered, some call selling started, and you see this time and time again. The Mag 7 is remaining strong though, which is giving me a little bit of hope, but what isn't giving me hope is the market really doesn't want to be above 600. Really does not like being above 600. Come on, get back up there. Let's confidently hold it. What do we have? Shit, we are quickly coming back to me. Yeah, little bit of put buying, little bit of call selling. That's exactly what happens after this blow off top. And it's more so hitting tech right now, a larger pullback in tech. The SPX is only back a couple points. I'm hoping that this is just a little bit of a bull channel, like parallel lines of lower highs, lower lows. I'm hoping for that break, but once again, in a normal account, I would just have the stop here and I wouldn't give a shit. But I, in the current state, have to care about this difference between that and where, dude, fuck this. I might have to ditch this one early and just like bite the bullet. I might have to, I don't like this though. This is just simply not how I trade. My trade would be this: stop, break even. If it hits it, it hits it. If not, I'm looking for the trend to continue. That's how I would normally want to trade this, but I might have to just, I don't know, guess a little bit here and hope that I'm on the right side of history. Look how it's just perfectly getting walked down. Fuck, this sucks. Come on. Oh, the things you do to build out a buffer, throw out all your basic trading systems out the window and just rip it for a bit of luck. Rip it for a bit of luck. Are you fighting back? Nope. Just so perfect, so methodical. And that's the mass crowd psychology reaction for that red-green move. That's one, like, I mean, I've now said this a couple times. Every single day, especially on the overall market, looking at things like the S&P 500, the NASDAQ, the Russell, every single day as an active trader, you want to mark out the previous session's high, low, and close, because those tend to be very important reaction points, whether psychologically or the fact that it's a self-fulfilling prophecy because enough people know about it. And a lot of the times that's actually where you have key options positioning as well. So there's many reasons, many true empirical mathematical reasons why we see reactions at the previous high, low, and close. And on top of it, like, that's what you need to know. I mean, even this, we ran right up to the close from yesterday, and surprise, we got smacked. So especially if you're carrying multiple positions, that might be the zone you want to scale out of. It becomes even more important when you realize if there's a key open interest at that level as well, like a considerable amount. And then it really matters as well if you are also in a giant transition zone, and that's exactly what we are. But see how we ran right up to it and got smacked? That's just because enough people know about this. They're like, cool, I know those odds. They rode it all the way up. They maybe got in some point early today. They're stoked with their gains. They bought it. And then on the flip side, people create bearish positions there because as soon as it starts to fail, great, you have your risk point. If you're right, you get to ride it all the way back down. And if you're wrong, you only take a paper cut. So like there's oh, fuck. Dude. Fuck. This thing, I hate having to trade like this. I fucking hate it. It's coming for me. Like, this is, I absolutely hate this buffer build out. But fortunately, as soon as you do it and get your realize where you need, then you no longer have to worry about it. So if you're trading well, I mean, you could get over this particular hurdle within like a couple trading sessions. I mean, fuck, you could do it in like one trading session. But I would love for these to be locked in at 2.5, because as soon as I'm above 2.5, I can go back to trading how Mateo wants to trade. As soon as my realized gain, my net liquid is over 2.5, the problem I'm currently having no longer exists. But until then, you have to kind of feverishly just watch the market. Matt, there are prop firms with realized drawdown. Yeah, and most of them suck. Most of them suck. Matt, why did you take profit on your take profit? Because on the take profit, there was no advantage for me to go above 1.5K. Once again, because the rule is specific to them. When you're passing the eval, there's a 50% consistency rule. And when you're going for 3K of total net profit, 50% is 1.5. So there's no financial or mathematical reason in that state to go above 1.5. So I got out exactly at 1.5 because literally, if there's no benefit on top, there's only risk. And I'm not going to get into a situation where I'm only taking on risk. It doesn't make sense. So that's why those got clipped there. While these ones on Apex, for the way that I trade, I could theoretically go up to 3K. So if there was like a big runner and a breakout, like let's just say the market all of a sudden decided to push through this transition zone and rip all the way up here, well, okay. I could go up for 2K, 2.5, 3. So it's just once again, the nuanced rule differences of what you can and can't do. So that's why when you get into these, I'm not saying one's better or not. I'm just saying they're different and you have to know the specific rules of the road for the game that you're currently playing. So that one, I mean, to directly answer your question on the take profit, there was literally as soon as I passed 3K, like what's the point? Just stop. Literally just stop. So that's exactly what I did because I get no extra reward on top of 3K. So I'm just here focusing on these. Obviously, that's a good return. That's 7.5. And even on this, I'm up almost an additional 20. but it just has to do with this proper management. And which is nice is if we actually hit a new intraday high, I could feasibly move my risk up to this wick at 72. So I'll be guaranteeing myself at least some money. Right now, I'm above the 52.5, so I could close it out. But on the other side, if this is a big ripper of a day, you don't necessarily like a common issue with retail traders is not holding on to their winners long enough, and they hold on to their losers far too long. And you really want to invert that. As soon as things go a little bit awry, train yourself to be like, okay, cool, I was wrong, and cut it and take the paper cut. And then also train yourself when you see that green, be like, okay, is the trend still intact? And if it is, keep riding. And unfortunately, a lot of retail traders, for many, many reasons, do the exact opposite. They cut their winners way too early, and they hold on to their losers way too long. So just be mindful of that. Fuck. I was actually really excited that we recaptured 600. Really excited. We're still in this transition zone, so I would love to see, I mean, the SPY's trying to hold green, but I would love to see this breakout of 40. I would love to see that breakout. SPY running into a bit of resistance. Here's a look at the options flow. Mag 7 slowly but surely climbing up. I would say right now in real time, this is the major reason why I'm still in the position I'm in, because I see that the options flow is supportive for my move. And then the S&P 500, this is what makes me wonder, like, should I be more aggressive with the stop, because the SPY is not trending as much as I needed to. I'm hoping that the SPY breaks in the direction of the Mag 7 and it starts to look like the Mag 7, because this is clearly strong. This is clearly bullish. I mean, you have people getting out of their puts. They're getting into calls. The Mag 7, the combo of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, that's bullish. The issue here of why we're not like pumping is the SPY's not showing it. The SPY was showing excitement up until 1032, and then since then it's looking a little bit lethargic. And more specifically, calls are flat and puts are flat, so it literally just is neutral, and it went neutral right at the red green test move. Fuck. Yeah, it's just there's not that appetite, there's not the bullish enthusiasm past this level. And unfortunately for me, it's close enough to my value that there's, I guess, a clear financial difference of what that does or doesn't. Come on, will it turn for me? Not a fan of this. Not a fan, not a fan, not a fan. I'm hoping that this support holds. Maybe a little short-term double bottom. Nope, cracking anyway. Fuck my life, dude. Come on. You could do it, bulls. I just need the S&P 500 bulls to step up, start getting some calls, start puking some of those puts, and just maybe, I want to see the SPY hold the red to green push. Now, while we're watching this play out, I guess I should clarify, this is not the smart move. The smart move is not betting on the breakout or breakdown. I'm betting that the red to green move breakout holds and then we push to the top side of the transition. That's the silly bet. The smart bet is playing it up to there because that's where the edge is, and then from there you don't give a shit. You lock in your money and you move on with your life. Maybe you scale out and leave on a runner and set the other part to like break even or something like that. But for me, I'm trading a singular contract, and not only am I trading a singular contract, I'm betting on a particular event to occur. I'm betting on the breakout to occur, which I don't like because the odds aren't on the breakout. Betting on the breakout or the rejections 50-50. Betting on the play to the upside gap fill, that's where the edge is. And this is just the shit you have to do at first as you're building it out, where you have to get like a little bit lucky. So I do want to clarify that this is what I'm doing. I don't like it. I don't like being in a 50-50 position. You could argue that I might have more than 50-50 odds just because price structure, price momentum, and options flow is somewhat favoring this move. But let's call it 60-40 at best. When in reality, the true play of the day, like the people who like know their odds and know what the fuck they're doing, they played it all the way up to this and they got out at 10:30. On the Qs, they got out at 10. They got out the second it hit the closing value because that's the odds. That's where you really have the edge. And now if you're betting, a continuation or a rejection, well, go fucking flip a coin and maybe you get lucky, maybe you don't. So I would much rather be on the side of knowing the exact odds of the stats I'm playing, like, and make sure they're favorable, versus right now where I'm kind of on that, but I'm also kind of taking a 50-50 flip. And ideally I can just be on the right side of a trade or two to quickly balloon my buffer. And then once you have more of a buffer, you can ideally withstand the variance of whatever your actual trading system is. So I just want to clarify some of that as we are about 15 minutes away from heading into the new hour. But I'm liking this potential breakout here at 610. Come on. I want this 1042 high to be taken out. The SPY looks to be taking it out. The Qs, Tesla's picking up. They're all doing their thing. I'm seeing potential push up to 40. Remember, this is still the gamma delta transition zone. So I'm looking for this push up to 40. And then obviously we would have the test of yesterday's high. Also a key options up, a key options level at 5,650. Taking out yesterday's high would actually kind of be supportive of this concept of a double bottom on the daily chart. Dude, every single fucking time it looks like it's going to go my way. Slightly went up, smacked. I mean, are we officially now in... this is just a grind of a trade. Yeah, see this? We're stuck in this positive gamma. Look directly to our right. We had nice fluid movement through negative gamma. We get caught up in positive gamma, and it just a stick in the mud. A stick in the mud. That's exactly why, once again, this is laid out as the choppy zone. Look at, we had a nice move. The second we got in here, everything slowed down and like just a choppy shit movement since then. That is the clear. This is why you have to know where positive and negative gamma are. Negative gamma, we rip through it. Positive gamma, the second we start to get into it, that's where everything kind of went choppy. That's where options started to look funky. It's just, this is the influence of market makers. Fuck. Really? Is it going to be a fake out breakout? I got so excited for a second there when it broke above 610. I was like, cool. We officially have higher highs, higher lows. And now I am deeply concerned about this trend line and a potential reversal, which it does seem like it's coming for me. Son of a bitch, dude. Truly, we kind of have gone nowhere since 1020. We had a nice push up to there, but overall, we're just stuck in this rectangle of hell. We pretty much have the same highs. We pretty much have the same lows. It's just not trending. We are clearly not trending. I got excited for that trend line breakout. That ended up being a failure. Maybe it'll retest a fake out breakout, a pullback. Come on, hold 600. It's having a tough time in this overall range. It's having a really tough time at 600. And when I say tough, it's not like the bulls or the bears neither of them are winning. This is a tough trade for everyone involved. You have the bear saying, is it going to puke? You have the bull saying, is it going to pop? Everyone's just like awkwardly waiting around. The SPY's picking up a bit, but remember, the only thing that gives us a future looking idea, remember, if you're using indicators, if you're using EMA, RSI, MACD, Keltner channel, all that stuff, all technicals, all charting is by definition backwards looking, and not much of it really has that good of predictive power. The thing that we have at our disposal that is forward looking is by definition options. Options are forward looking. That's why you want to check options flow. Technicals, charting, that is all backwards looking. And I'm not saying that it's bad. I'm saying that I actually really like technicals for understanding your risk reward, what's your risk point, what's your reward point, like things like that. But in terms of, if you wanted something of saying, okay, like, where are we going next? You are far better off paying attention to the world of options than you are anything related to technicals, because technicals is everything that's historically happened. It has nothing, it's not telling you anything about where we're going. So the only forward-looking tool, I shouldn't say the only, the main forward-looking tool you guys have and I have for trading is paying attention to the options market. By definition, those are all forward-looking. So I'm not against technicals. I just think you should be using technicals for your risk reward measurements, specifically your risks, swing high, swing low, what is the price structure, what is the price momentum. But in terms of if you were to quote unquote predict, which I hate predicting in the market, but the best predictive tool you have is options. Like clearly it is options. Matt, what did you do before making this channel? I spent most of my days just screaming into the void. If I'm being completely honest, just countless hours leading into days, leading into weeks, leading into months, just countless hours screaming into the void. But that's a little bit about me and my background. That's a little bit about me and my background, you know? Another fucking failed breakout here. Surprise, surprise. Makes me want to go back to my previous job of screaming into the void. Come on. Do this one for America. This should be for America. All right, SPY. What is NQ's high from yesterday? Quick, someone should have memorized that. So at 18 o'clock, at 6 p.m., we had a pump all the way up to 697 and also 73. I'm looking at NQ, wondering if I'm fortunate enough to get this break, which right now, that's very much in question. Feels like 52 is kind of pointless because the levels that I'm seeing, like, we're kind of above this breakout shelf right now at 600. It seems like 40, 70, and then this was all the way up here at 700. I'm kind of looking at the extreme from right when the Globex session technically restarted. But like I said, doesn't matter if we can't fucking hold 600. I'm going to go crazy, dude. This is going to drive me fucking nuts. I'm going to drive myself loco bonkers. All right, I'm moving my stop up just in case there's like a random vomit and I'm not paying attention to it. At a certain point in a trading day, you have to realize where maybe you're your own worst enemy. Maybe you have to realize when you are your own worst enemy. It's at 600. Is it going to hold? Is it going to break? Let's see. Okay, SPX, like the Qs, slowly but surely grinding, but we do have some resistance pretty close overhead. 5 minute, 10 minute, 30 minute, bullish, 4 hour potentially testing soon. Nasdaq 5 minute, 10 minute, 30 minute, bullish, 4 hour, still bearish, but I don't know, maybe putting in a higher low. We are, hang on, let me go to this. The SPY is slightly green now. The Qs are slightly red. So the Qs were leading the way higher, and now the SPY is actually doing slightly better. SPY is slightly green while the Qs are slightly red. Palantir's not doing anything. Tesla's not doing anything. Vol is collapsing, which actually should favor me. Bitcoin is kind of chilling at 86. The biggest gainer right now on my watch list is actually Palantir of 1.3. Netflix is up 1.3. Coin's up 1.6. DJT's down 6%. Texas Roadhouse is up 1.5. You have the yield curve falling a little bit. Fuck. Oh, we might not be holding 600. Another fake out breakout. I don't know if my patience can take this one today. Maybe a little trendline retest. This is the pain with fishing. Sometimes when you're fishing, you're just reeling it in forever, and you're wondering, did you catch a whale or did you catch a fucking pack of barnacles on the bottom of the sea? Oh, this has been a long fishing session. A long fishing session. Come on, give me that recovery. Give me that recovery. Mexico's President Scheinbaum. Okay, hang on. We're getting an update on some tariff stuff. Fuck. I wonder if that's what caused a little bit of a hiccup in the market here. Mexico's President Scheinbaum. Mexico gradually comply with U.S. water treaty after criticism from the U.S. State Department. Okay, that doesn't really seem to matter. The EU plans emergency measures to guard the economy from Trump tariffs. That was 16 minutes ago. Well, don't we all? All right. Is this a higher low that we could rip off of? Something is telling me I should move my stop up there. Something is telling me. The second we take out 21, whatever this high is, the second we take out this high at 1051, basically I'm looking for a push of 621. I'm going to move my stop up to this recent low. Just ensure myself a little bit more money because, hey, when you're up 20K, you don't want to completely fall flat on your face. When you're up 20K, you sometimes got to do smart things. And recently, with respect to futures, I have not been doing smart things. If anything, I've been doing dumb things. I've been doing smart things with options, and my recent smart move with options is not trading them right now because I need to wait for Trump. So I think sometimes doing nothing is actually the smartest move. So smart over there, while in futures, I guess I'm waiting for this to either tell me if I'm right or wrong. Come on. Come on. Come on, Bessie. Come on, Bessie. Snake eyes, snake eyes, snake eyes. Show me snake eyes. There we go. All right. Moving the stop up. All right. So I just keep moving it up and up and up and up and up. But I am in... VIX is dying. Texas Roadhouse is ripping. Bitcoin's doing its thing. I am kind of looking at this high from yesterday. Old Bessie. Old Bessie. All right. We don't need this. We don't need this. We really don't need this. All right. Can I catch this fish? What kind of fish is on the lure today? What kind of fish is on the lure today? All right, so if I were to go to not that one. All right, let's just go to the 30-minute. All right, I know this is messy. I know there's a shitload of things going on, but I'm seeing this pocket right here between like 40 and 70, and then I'm seeing this high up here at 97. And that's kind of why I have this target right above it. Yeah, that's 96, 97, whatever the hell this is. So I'm wondering, are we going to pump all the way up to that wick high, or are we going to pump to this body of trades right here? That's kind of where my eyes are first attracted. We're not... The 2 standard deviation move, which I really like, is all the way up at 91. All the way up at 91. Oh, do I just want to move my stop up to 608? Do I just want to keep following this? Because I believe at 608, what would that be? It would be close enough that the difference between realized and unrealized doesn't matter. If I get wicked out there, like let's say I put my stop and it hits me, I think it would be close enough to the 2.5 that it might not matter anymore. So I'm like, I'm right on that, the cusp. Fuck. Okay, something's getting announced. Something's happening. Fuck that, dude. It just cut right through it. I have a feeling that in a couple seconds, yeah, right here, Mexico's President Sheinbaum, we will not impose tit-for-tat tariffs. Why wouldn't the market rip on that? Literally just got reported. Mexico's President Sheinbaum, we will not impose tit-for-tat tariffs. And the market's like, oh, sick, drop. Fuck this. What am I at? We're in the upside down land. We're in the upside down land, folks. All right. Maybe if we pounce off of this, I could just move my stop up to this low. I'm basically just like watching the previous lows. And as long as we trend with higher highs and higher lows, that's what I'm kind of using. Honestly, I think that might just be the smart move anyway. I'm doing it a little early, but whatever. Whatever. Just trying to not Successful trading is successfully not doing stupid things over and over and over again. So, yeah, it might just wick me out on this. It might get smacked here, turn right back down, maybe, but whatever. I'm up. That'll be a gain of $800. Come on, fight it back. So no matter what, I'm going to make 800, which I think should bring me right to the 525, roughly, give or take a bit. But it's close enough that it won't matter for me anymore. Then I don't have to worry about the difference between the unrealized and realized. I just have to worry about literally the money in my account. So that's what the protective stop's for. But then the fact that I'm not just closing out now, it's because, hey, what if it really does just bounce off of this and it rips? Then I'll make more money. So I'm willing to take on a little bit of risk, not much. It's only like an additional 10 points that I'd be out, and I'm giving it a chance to at least breathe, and maybe I'll get something. Maybe. Oh, I really do like this idea of playing it up to the second standard deviation. Maybe I should let math lead the way. All right, so the SPY is in the green territory, just below the high, and same thing with the Qs. The Qs almost got to their high from yesterday, but got rejected slightly early, and I do see vol continuing. Oh, it's about to knock me out. Maybe not. It got really close. Is it coming for me? Market is just getting a little bit whippy with the current statements being said. You have all these bots that are trying to do some natural language processing and interpret it. Are these announcements in the discussion good or bad? Because it sounds like various world leaders right now in real time are talking, and why we see the quick active amount of trades. It's, well, first of all, liquidity is dropping because it's almost lunch. We're just past the 11 a.m. hour, and some of the natural language bots are not that good. So they're like, is this good? Is it bad? Should we buy? Should we sell? I mean, literally on the news that Mexico won't do tit for tat tariffs, we dropped, which like any human reading that would be like, isn't that a bullish thing? So that's just like literally one real-time example. This drop right here that we had was bots just being dumb, and they're like, oh, the Mexico's president said something about tariffs, must be bad, when arguably it was a positive thing. That's comical. On the report that they will not impose tit for tat tariffs, the market's like, oh, no, we would much prefer tit for tat tariffs. It just shows you that sometimes, like, as much as you can do to predict, even when you're right and you're like, no, I interpreted the situation right, price can still do completely the opposite. So like, that's another aspect of why attempting to predict is such an extraordinarily difficult game. You know what's going to be funny is if I am forced out at 28 anyway, which is exactly where I took all of these. So to go through all this extra fight just to get the exact same amount of money that I could have had, like at this point, half an hour ago, that's probably where my karma is leading me today. That's probably where my luck is leading me. Maybe I should just take it out at 28 because I could have got out when the getting was good before. I really just thought it'd keep going, and instead I've had to like withstand a lot of this silly shit. Very quickly, since we are near the end of the show, as I'm watching this trade, remember these accounts right now, this is the best offering. So if you want to trade with someone else's money, which I think is a great way to minimize your risk in the market, right now, the best financial deal for you guys is Take Profit Trader, because you get 30% off and never pay an activation fee. Pinned to the top of chat in the description of the video. You're allowed up to 5 of these. So I have all 5 just because, hey, if you trade well, you're going to 5 extra money even faster. But if it's your first time, I do recommend taking it slow and steady until you wrap your head around it. But anyway, use that code Goonie to get the 30% off and the activation fee. You have to put in that code to get the discount. Should I just take this at 28? Chat, what's the vote? Should I just take the money right now and end the stream and then see you guys back at 4 p.m. today for Trump's talk? Or do you think I should let this ride? I'm going to let you guys decide for me. Whatever most of you say. Should I just take the money right here, right now, and 1.5K? That's a 30 grand on top of the other 7.5. But what matters really right now is these PAs. That's like, quote unquote, the real money. You think I should just take it right now and take the 1.5? Or you think it's going to keep going? Put in the stop at 28. Well, unfortunately, we're just below 28. So I can't really put the stop in there. Double down. I'm not going to be doubling down. Not going to be doubling down. That's not necessarily in the cards for old Mateo today. I barely have enough buffer to be trading one contract, no less doing two. No less doing two. It is a little bit comedic, the fact that we're talking about it getting smacked right there, and it literally did. Just my luck. Obviously, the stop is in profit by 40 points. So the worst case scenario is $800. I could get out now, though, and secure $1,300, or I could try to let it ride and see if it wants to push all the way up here. Oh, what is this high? Okay. I would love a push on a fresh high, because then I could see how we just have this series of higher lows. That's what I've been using as my risk anchor point. So I could move my stop up from 94 to 606. So that would be guaranteeing me at least $1,000. I care a lot more about my stop than I do my profit target. Spin the wheel. Should we let the wheel decide? Should we let options flow decide? Here's a look at the S&P 500, still pretty much flat. The Mag 7 long and strong, which is giving me confidence in this trade. But I do want to clarify, we're right at the top of the transition zone. So it might be hard to break, but if we do, watch 50, 60. These are all the open interest levels of note. Bitcoin's going almost at the intraday high. The intraday high was 40. So this is the exact level that I got out all the way back here at 1032. I could have skipped this entire bullshit. I could have been like, hey, I caught the pump. Give me the money. Cool. Thank you. Done. And then I'm like, oh, cool. I avoided that. And it's choppiness. Like, talk about time and time efficiency. Golly. Golly. Come on. Come on. Maybe there's going to be a little breakout, a little break and follow through. A little break, a little 15-point pump that I could just break, fill, and then I don't care. Maybe that's the real move. A little break, bet on a 15-point extension, lock in a cool 40K. Maybe, just maybe. Come on. You could do it, Tonto. You could do it, Tonto. All right, moving my stop up just because why not? Generally, once again, if I didn't have to worry about buffers and maxes or any of that, I would just ride this trend as long as it's intact. I wouldn't really care about the time in the trade. I would just keep looking at, as long as we have higher lows, I'd keep anchoring my stop to the higher low and ride it. I would take what the market gives me. But alas, I'm not in that. I can't afford to trade like that at this exact moment because of the state of these accounts. So what I'm looking for is maybe just a quick push above this, maybe a 15-point push. It looks like it's 40. I just arbitrarily picked 55 because I don't fucking know. I don't know. But it might be coming for me anyway. Dude, should I just take it at 28? Is this the market gods telling me like 28 was the point to get out? And it's just making me fight for this entire thing. What are the market gods saying? What are the market gods saying? We're right below this high. All right. Let's see. We've been in this forever as a team. This is a team effort. This isn't just my 40K that we're going to make here. This is our 40K. More of a communistic view on trading. Oh, come on. Is it going to do anything? Here's a look at the options flow. We just got to keep reviewing our basics to make sure that nothing's changing. The SPY actually got a little bit of a pickup there on the longer duration. 0DT, no one's trading, which makes sense given the day. Mag 7 got a pop, a little bit of a pullback, but it did make a new delta high a minute or two ago. Oh, fuck. Is it going to bounce off of this? Is it going to bounce off of this? What are we doing? I'm not liking that. I'm not liking that. No siree, Bobo. Having a tough time making a new intraday high in the Qs. Mag's having a little bit of profit. What's it doing? What's it doing? Coming for me. Just
Order
tag
canceled.
me. Tag me at 1,000. Locked in 20 grand. Locked in 20 grand. It was quite the fight for 20 grand, but hey, 20 G's is 20 G's. Obviously, I was just using this recent low. It wicked it. Honestly, I think it keeps going. If I had a larger buffer, honestly, I just have it set to break even way back wherever I was in at 50, and I would just leave this, keep riding and riding and riding. But last, I can't do it because I just really wanted to make my realized gain right above. I gave it a little bit more of a buffer. I think the max I saw it was 1,500, so it pulled back about $300 to $400, and then I locked it in. It's really not that far off of what the theoretical perfect exit would have been. So it is what it is. The market just didn't have it today. I guess I couldn't have really had an expectation for anything much more fancy past this, just because the day is most likely going to be a choppy piece of shit mess. So the fact that I made 20K on Apex, why are these still trading? What the fuck? Hello?
Order
Okay.
filled. Order filled.
Okay, that's a bit
Order
weird.
filled. Order filled. Order filled.
Interesting. Interesting problem. So just made another $500 there. That was awkward. Awkward to say the least. Let me make sure that I don't know what the fuck that was. I guess it was one of my leftover orders. But hey, at least it made money. All right. I think I cleared it all out. Hang on. Let me just double check. Positions. Okay. There's no positions. All the accounts are actually flat. That was interesting. A weird little... I think it's because I had the protective orders there. That must have just not got canceled when the initial order hit. So I think I have an idea what happened. But let me just cancel all the orders to make sure. But that's it. I mean, I guess just to show you guys how it ended, I didn't make any option trades today. I made 20K on the Apex accounts, and I made 7.5, or actually now a little bit more, about 8K on the take profit. So that's how ideally it'll settle. If I see a good opportunity, maybe with options, but honestly, I feel like my stop out right there might have actually been a good one. So I think sometimes, like, we all have these numbers in our head of what we want, but sometimes it's just not there for the market to offer it to you. And today is one of the days that it just stopped going. I was in a little too late. We didn't get that big of a push. I'm very happy with the 20K, and you just live to fight another day. That's what I have for you. Obviously, check out Take Profit Trader. They are the partner of today's stream. Use that code Goonie to get 30% off and no activation fee when you pass the eval going over to the performance account. I will catch you back at 4 p.m. today when Trump is talking from the Rose Garden. We are doing a specialty stream. That's what I have for you right now. I appreciate all the good vibes. I'll catch you guys later. Peace.